Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, February the 1st, 2022. The markets continued to move higher today, and then after Google reported, both the S&P and the NASDAQ did put in a stellar performance and just boosted the day's gains by even more. And on that move, while the S&P has still not broken above 4572, which would take us above, or 73, which would take us above minor wave one of the previous 5-wave decline that I was counting, I have gone ahead and switched the count around and moved the 3 up to here, the 4, put the minor 5 in place, and intermediate wave 1. And I had discussed this yesterday and felt very strongly that for this to be a 4th wave, it was just too big. It was too big in comparison to what it was correcting and what the potential was. It just was too big. So it made more sense, and it now counts out much cleaner as a intermediate 2nd wave. So now what can we expect from here? So if intermediate wave 1 is done, that gives us the initial first 5 waves down of minor degree, which count, not breaking any rules, everything fits. And that then suggests that this high at 4808 is indeed the completion point for intermediate 5, primary 5, cycle 5, supercycle wave 3. So we are now in those initial stages of a supercycle wave 4. Now, what's going to be inside of supercycle wave 4? 3 waves of cycle degree to be labeled A, B, and C. What's going to be in that first cycle wave A? Either 3 waves of primary degree or 5 waves of primary degree to form wave A. So now, going back down one more, what's going to be in that first wave A of primary degree? It's going to be either 5 waves of intermediate degree or an ABC 3-wave decline. So this is going to remain either wave 1 or intermediate wave A. So we have a lot to look forward to in terms of the great trading, rallies, declines, all mixed. Volatility will continue to increase, continue to provide some superior trading. Now, what does it pretend that we should do for tomorrow? For tomorrow, I think we are continuing up within the C wave. Now, where are we? Within wave C, a minor wave C, we're going to have 5 waves of minute degree. So if I now open up this up, please, let's do this slowly so it can follow us. There we go. Now I'm in here. So I've got 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3. Well, maybe. So I think that we're still inside this minute wave 1 of C. And at best, again, 1, 2, 1, 2, 1, 2, 3, 4, 5 of that 3, 4, 5 of that 3. So maybe this could be 3 and then a 4, and then we get the rest of it. So I think that maybe possibly minute 1 of C ended here, and then we get an ABC, and this could be minute 2, and now we're in that minute 3. But I still actually believe that we're still within minute wave 1. So these we've got to count as sub, and that this could be the finishing point of that sub, and this is a sub 2, and now we're into a 3rd wave. I really do suspect that this 3rd wave will at least get us up to 45, 85, 86. And I would be looking for the whole wave C to push up closer to 4,700, 46.61, 46.41. So we still have some solid earnings reports to come out, but here's what I don't expect. And should it happen, it's not necessarily going to change the downside count, but it could move this to a wave, intermediate wave A, and we could get an irregular wave B, which then could take us to a new high. And should that be the case, then we'll track it and we'll follow it along. But right now, I'm not suspecting that that's going to be the case just yet. But I am looking for continued rally tomorrow, and then we get a pullback. And that pullback could likely find support at 44.74. And right below that, we have the 50 moving average, the hourly, and then we have the hourly 200 at 44.47. Now, if it drops all the way down to there, from here, that's over 100 points. That's a pretty big drop for the S&P. And I now feel that we're going to be coming in higher. So first of all, when we do start to pull back, we have support at 45.30. That is the hourly 8. And then the hourly 20 is at 45.11. That's still a 40-point drop from where we are right now. That should be pretty worthy of a fourth wave or a wave 2. So we're going to continue to count this out. We're looking for the pullbacks. They should be shallower, but at this stage, because of the height that we're getting out of the moves, pullbacks are likely going to be just as strong. And what I mean by that is that we may not be looking for it to go quite that far, but I would suspect that because we're moving up so quickly, we should be able to come back down and still hold the 20, but for sure hold the 50, and possibly even down to the 200. So the pullback could last a day, 2 days, but we'll see. Ultimately, I am looking for these higher levels over this very near term. I think that this could all roll out in the next couple of weeks. I think that the NASDAQ could move to a new all-time high very quickly, very quickly. The NASDAQ has put on 1,400 points since last week. And so what's to say you couldn't do another 1,400 points from here? And we'll be right back up towards those highs. Now, I don't suspect that the S&P will follow suit. The S&P reached its high, the NASDAQ did not previously when it got up to that 48.08 level. The S&P and the Dow made new highs, the NASDAQ did not. So I feel that now we've got that reverse situation. The NASDAQ moved faster than the S&P. The NASDAQ has additional stocks that have a higher weighting in its index than the equivalent weighting here in the S&P. We have Facebook's earnings tomorrow. We have Amazon on Thursday. PayPal is the negative to the whole picture. PayPal's earnings has the stock lower $31 in the Globex, in the start of Globex. Now, I don't believe that PayPal has a very high weighting. If it is within the S&P, and I think it might be, its weighting is not very high. So, and in fact, it's having somewhat of an effect on the NASDAQ, where it is as a lower weighting, but still is a member of the NASDAQ 100. And it's kind of pulling it a little bit in both directions. Okay, so I'm going to leave it right here in terms of, I do expect higher levels. I think we might get up towards 45.85, and then the market will pull back. Right now, though, it is making additional new highs over what we saw right after the bell. At 54, we're now up to 55. So possibly it can get a little bit higher. It's above that resistance at 45.51, 52. So that could complete this rally phase that we're in. And then we get that pullback, which will bring us back down towards 45.30, 45.11, and then we start the rally again. So trade smart, continue to trade using the moving averages. Use the new Fibonacci that we have up there within for this extended wave 2 or a B wave. So, and if it's a B wave, it has the potential to go all the way up like wave 2, up and almost retest that high of 48.08. So we're going to be feeling that from the marketplace that people are piling back in because we're going to new highs. We're going to new highs. And that I do not believe that is the case. If it is, it's a B wave. And they're very deceiving. And so no matter what, I still would expect this thing to top, turn, and drop. And the next drop down should be pretty severe. If it's a C wave, it's going to resemble a third wave. If it's a third wave, it's going to be the longest and the strongest. That C wave still is going to carry all the characteristics of a third wave, and the move down should be pretty solid and intense and accelerating. Okay, I'm going to leave it there. Our next update will be on Wednesday, February the 2nd.